Hi, I'm Siu Ling Hui, Principal of Income Tax Finance. In this video, we'll look at how to plan and manage your cash flow so that your business can meet its tax obligations on time. Since the 30th of June 2012, the Australian Tax Office has had greater powers to make a director personally liable for a company's pay-as-you-go withholding tax and employee superannuation entitlements. So it's even more important than ever that company directors ensure that the business can meet its tax obligations. Sound cash flow planning and management is vital to ensure that tax payments can be made when due. Let's use a simple example to understand the cash flow effect of PAYG withholding tax and superannuation entitlements. It's easiest to show this by starting with a clean balance sheet. So let's say we set up a new company called Newco Proprietary Limited just before the 1st of July. Newco operates as a widget retailer. It has $25,000 worth of inventory and $30,000 in cash when it commences trading on the 1st of July. These assets have been funded by a combination of paid-up capital and loans from shareholders. I'm going to keep the numbers simple. Newco has monthly sales of $100,000 in the first quarter. It has 3 employees with monthly salaries of $4,000 each. Superannuation guarantee charge is 9.25%. This is the new rate that applies from the 1st of July 2013. We are going to assume that Newco is a pretty profitable business. Now let's go to the balance sheet. First, here are the key assumptions made in constructing the balance sheet. 25% of sales are on a cash basis, 75% are on 30-day credit terms. However, only 60% of debtors pay on time, 45% pay within 60 days, and 5% pay after 90 days. We'll hold inventory levels at $50,000. That represents inventory turnover of about 6 times a year. Suppliers provide 30 days credit and Newco pays on time. Newco lodges its business activity statement on a quarterly basis, so PAYG withholding and other taxes such as GST for the September quarter will not have to be paid until, say, the 28th of October. Superannuation payments are required to be made by no later than 28 days after the end of the quarter. You can see from the balance sheet that the amounts owing for PAYG withholding and the superannuation contribution increases over the quarter to the end of September. When payment is made at the end of October, these liabilities decrease. Now let's see what happens with cash flow. In the first quarter, debtors and the once-off increase in inventory levels chews up cash flow. Trade credit terms help ease the working capital requirements in the first month. Because our simplistic model assumes constant sales and inventory levels, the cash flow impact of these working capital items flattens out from October onwards. What we are focusing on here is the effect of the various taxes on working capital. Notice how these tax items actually provide working capital funding for the business through the first quarter. But in October, the net GST liability, PAYG withholding, and superannuation payments have to be made. So tax liabilities become a drain on working capital in October. In terms of cash position, Newco has a shortfall of just over $12,000 at the end of August. It'll have to find a way to cover this cash shortfall. After August, it would appear that it does not have any cash issues at all because all the closing bank balances are positive. Let's assume that the October numbers are forecast numbers. Newco starts the month with only $6,761 in the bank in October. It expects to have positive net cash flow from operations of $7,246 after making the GST, PAYG withholding, and superannuation payments. So it'll end up with more money in the bank at the end of October than it had at the start. So cash flow appears to be fine and there won't be any problems making the tax payments. But is that really the case? Well, it all depends on the cash flows during that month. What if the weekly cash flow forecast looked like this? What if supplier payments had to be paid in the first week, but debtor collections only happen in the last week of the month? What if in the week ending the 1st of November, the debtor collections come in after the due date for payment of the taxes? The fact that Newco is highly profitable does not ensure its survival as a business if it cannot meet its payments as and when they fall due. Unless you have arranged for financing of just over $56,000 to cover cash shortfalls that happen within this month, Newco would have financial problems and would be unable to meet its tax and superannuation obligations. Of course, Newco could have a very different pattern of cash flows within the month. Maybe payments to suppliers don't happen until week 2, and debtor collections tend to be spread out over the month. If that's what the likely intra-month cash flow looks like, then Newco's main concern would be covering a peak funding requirement of around $24,000 in week 2, maybe a bit more depending on whether the cash sales and debtor collections can be expected to come in before salaries and wages have to be paid. No business can afford to miss paying its employees on payday. But maybe Newco's weekly cash flow pattern is expected to be like this scenario 3. If this is the case, Newco doesn't have any problems with cash flow at all. But you won't know this unless you do the weekly cash flow forecasts. The point here is that cash flow must be managed at 2 levels, at the strategic level or the working on the business level, and at the operational or working in the business level. On the strategic level, 3-way financial forecast, that's forecast profit and loss, cash flow statement, and balance sheet, provide a high-level view of the business outlook. But timing is everything with cash flow, and that's why you also need to have weekly cash flow forecasts. That will show up any potential cash shortfalls within a month. The financial forecasts should be updated or rolled forward on a regular basis so that they are based on the most current information about business conditions. With monthly 3-way forecasts, you should always be looking at least 3 months forward. Rolling weekly cash flow forecasts should show what's happening for 8 to 12 weeks ahead. Profitability is irrelevant when it comes to PAYG withholding tax and superannuation. PAYG withholding and superannuation have to be paid even if your business is making a loss. PAYG withholding is your employees' income tax payments. Your employees have the right to get tax credits against the income tax that was effectively paid by them via the withholding tax. Superannuation contributions is your employees' money. It's all very well for a business to use its employees' money to fund working capital for a short while, but at the end of the day, it must pay these amounts to the ATO and the relevant superannuation funds on the due dates. If the business doesn't file the required reports and doesn't pay the amounts due, then you, as director of the business, can become personally liable for these amounts. There are also other adverse consequences of non-compliance with tax and superannuation payment obligations. Non-compliance is likely to put the business in breach of covenants of financing facilities. Look, you do not want to have what I'll term as interesting discussions about tax debts with your bank. It's very hard, in fact virtually impossible, to get financing if your business has tax debts. Tax debts are considered to be a sign of poor financial management. Late payment of the superannuation charge can also mean that this expense is no longer tax deductible for your business. If your business is genuinely having trouble meeting its payments, don't avoid or ignore the issue and hope that it will go away, because it won't. Not filing just to stay off the ATO radar isn't going to work either. It's much better that you speak with the ATO to arrange some sort of payment program. You also want to make sure that you adhere to the payment program once it's agreed. I would appreciate your feedback, so please put your questions or comments below. Do you want to be able to manage your cash flow more effectively and efficiently? If you do, contact me via the contact page at incontextfinance.com or call me on 03 8678 1857. Thanks for watching. If this video has been useful, please like, subscribe and share.